So blacks are more likely to be rejected for a home mortgage? Got more Rhetoric coming right up. What's up, y'all? Welcome back to Common Sense, Logic, and Reason. And as always, I want to say thank y'all for joining me today. So I have more Rhetoric for y'all. Blacks are more likely to be rejected for a home mortgage. It's an example of end result thinking. Again, black people looking at the end result and ignoring how the process of how we got to that end result. Again, very common amongst the left, common amongst blacks. Now, in 1996, the Federal Reserve Bank of Boston did an economic study, and their findings was that blacks were being redlined, or so they say, in Boston. They claimed that black people were more likely to be rejected for a mortgage or home mortgage loan than white people. Of course, back to this notion that America is just nothing but black and white people and nobody else. Again, they just live in this vacuum. But when it comes down to loans, and specifically mortgages, but all loans in general, there's certain factors that lenders use to determine whether or not a person is going to be approved or rejected for a loan. Now, the most obvious factor they use would be your credit rating. I mean, the credit rating is based off of basically your behavior, how you behave with your credit and where you're paying your bills. How reliable that you are in paying your bills. That's what the credit rating is. So obviously they're going to focus on your credit rating. And then your income, how much money you make. You know, if you get a loan, can you pay it back? I mean, you can't pay it back if you don't have any income. So obviously income is going to be used. You know, how much money you make, it's going to be used. Then there's also collateral. You know, collateral is the amount of assets that you own. In the case of a person cannot repay that loan or they default on a loan, the lenders want to know, is there any way that we can recoup the money that we've used or that we've used to this loan? Can they recoup some of it back or something back if they have assets that they can sue that person for? So collateral is something that they use to determine if that person is going to be approved or rejected or not. Then there's the down payment. You know, the more that a person put down on a home, that basically the person is more invested in that loan. So if a person can put down that down payment, it's going to make their loan a lot more attractive to any lender. So down payment is something that they use. You know, how much of a down payment that you have, the more you put down, the more attractive that your application is going to be. And then you have the DTI and the LTV of loans, right? DTI stands for debt to income ratio. Well, how much debt you have compared to how much income you're making. Because if you have a lot of debt, that means that you don't have very much room to play with. If a lot of your monthly income is going to pay bills, and if 95% of your income is going to pay bills, you only have 5% left. So if that's your case, then you are very much of a risk, because you can't accept any risk, any bad thing, negative thing that happens. Car breaks down, damage to the home or whatever, you're going to be in financial trouble. So you are going to be deemed as a risk, as opposed to, let's say, if 50% of your income is going towards your monthly bills, well, then you have a security bet. You have a safety net that you can rely on. So your basically income is not leveraged as much to debt. So you are a more attractive person to lend to. Then there's loan to value. You know, how much is this mortgage going to be compared to the value of the home? If it doesn't make any feasible sense, then the lenders are going to reject that. They're not going to basically give out a personal loan when it doesn't make any sense based off the actual value of the home. That doesn't make any sense. Then you have different market values, or market factors that happen, where basically factors in your area. It could be in your area, it could be local, It could be national, but there's several economic factors that will determine if a person is likely to be approved or rejected for loan. And that's everybody. That's not just a specific race of people. But there's always market factors that determine whether or not lenders are going to lend more now, or they're going to start rejecting loans now because of the market factors that exist. And then there's the institution that you choose, because all institutions aren't the same. You have different types of institutions that use different values. Some you may use them all, some may use less. But the type of institution that you goes to or choose to get along with matters. Such as, say, if you go to a credit union, sometimes credit unions tend to be a little bit more lenient in their basically the criteria that they use. But regardless, the institution that you choose to get along with matters, right? And I just gave you these 8 factors that goes into whether or not a person gets a loan. Now, the problem with that study that the Federal Reserve Bank of Boston did is that they use 2 factors. And out of all of those possible factors, they accounted for 2. They accounted for credit rating and they accounted for income. So basically, 1/4 of all the factors that I just provided, they accounted for 1/4. Now, does anybody really believe that that study is going to be accurate? Is that there's going to be any accuracy in that study based off of the fact that they just used 2 criteria? I don't think so. So that's a flaw in the study that they did. Now, I know a lot of people are going to come out and try to say, well, no, they accounted for many factors. No, they didn't count for those many factors. They accounted for 2. You can go read the study for yourself. They accounted for those two criteria, those 2 factors, income and credit rating. And this is what being pushed out as evidence of anything. This is why you have to, whenever you hear anything from leftists, you have to always go out there and get the information and the facts, because you know they're going to give a lot of false evidence and they're going to give a lot of half-truths, and they're going to do anything to push their agenda, because again, leftists are agenda driven. They're not driven by the truth. Their objective is not to get to the ultimate truth. Their objective is to push their agenda and whatever they have to do to push it. And this is an example of this. So the fact that people will bring up this study is just beyond belief. Again, most people just heard it and didn't go out and do any research into what really happened. So they just regurgitating and repeating what they heard. But the fact is, that study done in 1996 is very much flawed. You cannot do a study on home mortgages and then only account for 2 different factors when there's plenty of factors. And again, I'm pretty sure there are more factors that they use that I didn't give here. Regardless, if you ever hear anybody cry about how black folks are being rejected for home mortgages in America because of racism, well, now you know, and knowing is half the battle. And as always, y'all, until next time.